It seems to me that people are concerned about the growth outlook, both here in the U.S. and abroad. We had weak data, as you know, in Japan and in Europe. And then you've got the Fed that was very hawkish about 8 weeks ago, saying it was planning on continuing to raise rates past neutral. So to me, it's the growth concerns. My guess is that this is temporary, that eventually we'll find a bottom and markets will recover, because I don't see a recession on the horizon.
Then, okay, so a lot of times it might be totally unrelated when you've got tech stocks that were, so extended, and I don't know whether it was a bubble, but, there are 2 or 3 that were trillion-dollar market cap companies. So we know about the FAANG stocks and how well they had done. So if those retrench, it doesn't mean that the tax cut was a failure. It doesn't mean that the idea that we could grow at 3% maybe for at least a year, and maybe for, it doesn't mean that all bets are off, because I'm seeing people say that in the financial media.
Look, the tax cut, for it to be, for whether it's good or bad, it needs to be judged in the fullness of time. And that means that it's going to take a while. We'll have to look back a few years to see how good it was. It's interesting because people who didn't like the tax cut now say that the economy is slowing because it got the lift earlier from the tax cut. We just don't know yet. What was good about the tax cut was certainly the lowering of corporate tax rates, the incentive for capital spending, and whether that produces the effects that people believe they will just aren't known yet. But generally speaking, Joe, I mean, the economy's been pretty healthy. The consumer's been good. There's been a valuation on some of these tech companies being very, very high. And that's why the momentum in those companies got hurt when rates moved up in relative terms quite high a few weeks ago. And we're just dealing with that now. And the economy should benefit from, at least in the U.S., a still pretty healthy business backdrop. I don't see why it wouldn't.
Right. The other thing that people are pointing to is debt, and corporate debt, and new highs in personal debt. And then you've got, the $21 trillion deficit. And even if we are growing, it seems like there's at least a perception that there's a wall that we're going to run into in not too long a period of time as the Fed continues to go up. Does that concern you? Is that true, or is that?
We will. I mean, well, Joe, on the corporate side, you're exactly right. Non-financial corporate debt as a share of GDP is over 45%. It's at a record high. But on the household side, household debt is back to what it was about 15 years ago, and you've got a tight labor market. You've got some evidence that wages are growing, and household debt service burdens are quite low. At some point, yes, the debt will do us in, but there's nothing that's preordained that says we have to slow, that we have to go into recession anytime soon. I mean, look at Australia. I mean, they've been growing since the early 90s. So it really comes down to policy. Do we get good policy? Next year, do Republicans and Democrats work together perhaps to come with an infrastructure bill? Do we make some improvements on health care? I mean, there's a lot of things that if we actually do, can extend this business cycle a good deal longer. Nothing says we have to slow or next year has to be bad. I just don't believe that.
There's a perception that maybe the Fed is starting to soften its position on maybe next year, or if they don't, if the dot plot doesn't change, the commentary after they hike, let's say in December, that's going to show that they're more in tune with the possibility that global growth isn't what it used to be. Do you believe that?
I do. I mean, I've made an argument for a long time that the Fed has been way too academic. They focus way too much on the unemployment rate and lose sight of the big picture. Powell's comments from a week or so ago, 2 weeks ago, did seem like he might be shifting that. And I would expect, Joe, over the next few weeks, and possibly as early as next Wednesday, that the chairman does soften his tone a bit and produces perhaps some uncertainty around those dots. I don't think they'll change the dots. I think the dots we saw in September with 3 hikes next year and another one in 19, I don't think they change. But I think the confidence that the Fed has in fulfilling that path might be questioned, and that could be enough to stabilize these markets.
Would you agree if Powell backed away and continued? I mean, your view is that the economy is fine, it is strong. So does that necessarily mean that you think the Fed should actually ignore the concerns in the market and go ahead? It sounds like you think they should continue to tighten.
Yeah, I don't think it should, Melissa.
Okay.
They'll go ahead. I mean, they'll hike in December
Sure.
because the momentum is there. People have been talking about it. I mean, there's a political issue if they don't go. But beyond that, I mean, the markets are forward-looking. The inflation has moved back below the Fed's target. The 3-month rate of change has fallen well below 2. So the Fed has the excuse. with the global economy looking more shaky, to say, look, we're not, we're data dependent. We're not on autopilot where we have to hike. And I just think it's that little shift in tone that would be enough to maybe steady investors.